Hello and welcome to Martyn Lucas Investor. My name is Sensei and we are here for the morning forecast show every morning, 2 hours before the opening bell. Today was a bit different. I hope to tell you more about that later. But we are now moving onto the top story today, and the top story today is happening in less than half an hour. It's actually in about 20 minutes time, and that's PCE. This inflation data is the most important inflation data. Why? Well, let me go over to this screen here and we'll go right over to our own very own newsletter where we get the news in for you. We verify it, we spend hours researching it, and we've got the whole breakdown here. So what am I talking about? Well, I'm talking about, if I refresh this, we will come on to today's newsletter, which is, will the PCE break the market? We've got PCE inflation data. It's not just any inflation data. It's not PPI. It's not CPI. This is the Fed's most important data point they look at before they go into the FOMC. The FOMC is next week. Next week is when they decide if they're going to cut rates or not. Of course, they can decide to do a rate hike as well, but that's not what they're going to do. There's no chance of that. But there is a chance that they hold rates where they are. And today's PCE is what that will depend on. The Fed's preferred metric to look at inflation is not PPI or CPI, it is PCE. We haven't got PCE for over a month now because of the shutdown. This is the first PCE data since the shutdown ended, so it is a very important one. So inflation data in less than 20 minutes. This is what we're looking for to see if there's going to be a soft landing or hard landing. Remember, we want a soft landing that will just continue the bull market running. There might be a bit of volatility, but we'll continue in a bull market. A hard landing would be when inflation gets out of control, and then we get a recession or we get a big drop in the markets. That's not what we want. That's not what the Fed wants. That's not what the Fed thinks they're going to get. But this will be the triple test for the soft landing. So market conviction is the current economic narrative. Market conviction in the current economic narrative faces a critical test immediately following the data release. A core PCE print exceeding 0.2% month on month would signal entrenched inflation and significantly lower the probability of a December cut. Remember, the higher the inflation is, the lower chance we have of a rate cut. If inflation comes in high, the chance of a rate cut decreases. That is the way that those two work. Inflation up, rate cuts either go up or they stay where they are. Right now, because we are in an easing cycle, instead of having a rate hike, we'll just have the rates pausing to keep inflation under control. So for today, the number we're expecting is 0.2. We'll bring that number to you straight as it happens in about 18 minutes time. If you have just tuned in, make sure you are hitting that like button. Please do make sure you are subscribing. And if you do appreciate the content, please do also make sure you subscribe and hit the like button, and also sign up to the newsletter. It is the first link in the description. It's also in the live chat. We go live, and I hope you guys are appreciating the fact that we're covering all of these important data. Most people say data is boring. We don't like looking at data. However, data really, for me, it allows me to trade some of these events. I don't normally, but if there's a good opportunity, I will. But more importantly, it allows me to be more confident in my investments, or it gives me more information to make more informed decisions. So I look at this data, and if I see PC up, I get a bit concerned about the market. I go, actually, there might not be a rate cut, and then I readjust my positions. What's good for what can I buy that if we do have sticky inflation, what companies can I buy? And then I start looking at Dollar General. I start looking at these staples. So all of this data is really important, and I hope you guys appreciate that we do cover these data. I know there's lots of data that always comes out, but this one is a very important one. So I hope you do enjoy the data streams. Anyway, 17 minutes time. Let me give you some more information about this PCE number. So let me go over here, look at over here. This is what we're going to, this is probably the first thing that's going to refresh. Bloomberg's always a bit behind. We're actually ahead of Bloomberg. So what we're going to see here is in about 17 minutes time, we've got lots of data coming out. We've got core PCE month on month, core PCE year on year. We've got PCE price index month on month, and PCE. We've got also PCE. We've got core PCE and PCE year on year. We've also got personal income coming out and personal spending. The most important is not personal. It's not PCE. It's core PCE. The elements within inflation that aren't very volatile. It takes away some of the some of the things that could be a bit more volatile, and that doesn't give the Fed good information. So core PC, as you can see highlighted over here in red, that is a high impact data release. This is going to move the markets, and these are the two we're focusing on. Yes, we'll have a look at these other ones and they might have a little effect on the market, but these two up here, core PC month on month and core PC year on year, remember it always goes back a couple months. So this will be September's inflation numbers. This isn't December's inflation numbers, this is September's inflation numbers. What we're expecting is, previously it was 0.2% on month, and year on year was 2.9%. What we're actually expecting this time round, let me see if I can move over here. What we're expecting this time round is the same, 0.2% month on month, 2.9% year on year. We're expecting inflation to be fairly sticky and stay where it is. We know that the general course of inflation is down, but on this month's release, that's what we're expecting, and that's fine. That's what the market has already priced in. I have raised my concern to you guys about how I think inflation is a bit sticky, and that therefore next year it could be really trickier with rate cuts, and that's when I think the problem will be. However, for now, where we are in the markets, if we're looking sort of short-term, medium-term, what we need to look at is these two numbers, 0.2% and 2.9%. That's what the market has priced in. That's what's priced in when you look at rate cut predictions, now at 87%, dropped slightly because of some of the data we've received in the last couple of days. But essentially, 0.2%, 2.9%. Though this is where you're going to look in 14 minutes time. This will refresh and we have two numbers beside this. If it's lower than 0.2 and 2.9%, that means inflation's come down. That would mean brilliant. The Fed will look at that and go, great, inflation's come down more than expected and the jobs market is looking a bit weak. So what we're going to do is cut rates. If I see the numbers at below 0.2% and below 2.9%, I'll very happily say live on the show, we're 100% going to get a rate cut in December next week. However, if it is at 0.2% and 2.9%, the market's already priced that in. However, I think it'll be sort of a sell the news. No one knows what happens if it's exactly that. Essentially, what that will mean is we most likely are going to get a rate cut. The rate cut expectations will be around 80%. If it's above that, that's when it's concerned, and that's when we'll see a sharp sell-off in the market, and that's the sort of time I like to enter a position, because everyone gets a bit fearful very quickly, and there could be some liquidations, especially in the crypto market. So if I see 0.3% and 3% or 0.4% and 3.1%, that's when I would go, actually, the market's about to sell off, and the market's very quick, so I wouldn't recommend trading this because they'll have the data seconds before us, and that will make all the difference. However, it still gives me time to buy. It won't give me time potentially to short it, but it would give me time to buy. So if we're at 0.3% or 3%, if inflation is higher than expected, I personally think there will be quite a big sell-off in the market. Again, I'm not a financial advisor. I can't predict the future. There could be other things that might affect that. But in general, the lower, the better. Same, who knows, it'll be volatile up and down. Higher, bad. And these are the numbers we'll look at in about 13 minutes time. We'll watch it together. We'll go through it together. We've got Bloomberg covering it with us as well. Let me go back to newsletter so we can get even more prepared for 12 minutes time. If you have just tuned in, if you can make sure you've hit that like button. It takes 1 second. 1 second. I'm going to wait. I'm gonna pause. You have to hit the like button. That you who are watching right now, I'm gonna wait until you hit the like button. It's free. It takes a second. So I'll pause and also hit the subscribe button. So I'll give you 5 seconds. Just go down on your TV. You can do it as well. Hit the like button. Have you done it? I bet you haven't. Just hit the like button. It takes a second. Also, please do subscribe if you haven't done so already. Okay, let's go into that triple test for the soft landing. Market conviction in the current economic narrative faces a critical test imminently following the data release. A core PCE print exceeding 0.2% would signal entrenched inflation and a significantly lower and would significantly lower the probability of December cut. So this is the rate we're looking at for December. There's an 87% chance of a rate cut in December. If we get higher than expected inflation, we would expect that chance of a rate cut to diminish, and we would expect the market to sell off as well. So this outcome would typically drive. So if we do get higher than expected inflation, exceeding 0.2% month on month or 2.9% year on year, the outcome would likely drive the 10-year Treasury yield. Remember, we're starting to talk bonds, Treasuries. I want you guys to start understanding what we mean when we talk about Treasury yields and why it's so important in the market. It's a bigger market than the stock market. It drives everything. So if we do get higher than expected inflation, the outcome will drive the 10-year treasury yield towards 4.5%. What's a treasury yield? Essentially, you're loaning money to the government, and they're giving you a return on your money. It's very low risk, but risk increases the worse the economy is. So what we're looking at is, if inflation increases, the 10-year treasury yield will go up from 4% to maybe 4.5 or 4.2%. I don't know where we are exactly, but it will go towards 4.5%. It will go higher. The yield will go higher. That actually means it's a threshold that would typically trigger volatility across equity markets, because if people can have guaranteed 4.5% returns, why would they risk money for an extra 1.5% return on average on the S&P 500? If we're assuming the S&P 500 has a 7% return, or let's say it has an 8%, why would they risk money for an extra 2.5%? That's the issue. If inflation goes up, the treasury yield goes up, people are less likely to want to invest in the equity market, especially when it's quite volatile right now. And my biggest concern is 2026. Once we get this rate cut, I'm fairly confident we'll get a rate cut in December. We'll get that confirmed in 10 minutes time, but I'm concerned about 2026 because everyone is disagreeing on how many more rate cuts we need in 2026. Some people say no more, some people say one more, some people say two more, some people say five more. That is going to be, everyone knows the rate is too restrictive today, but no one knows after today where is the restrictive rate. And that's a concern for 2026. But anyway, we're focusing on today. If we get higher than expected inflation, PCE, remember, if you just tuned in, we're covering PCE data in 10 minutes. This is the most important inflation data release for months now, because the shutdown stopped this data. Next week, we're going to FOMC. PCE is specifically PCE, not PPI or CPI. PCE is the metric that the Fed look at and make their decision on. We are going to be analyzing the data. We're going to get ready. So in 9 minutes time, we can be prepared for that data to be released. We're covering it live on the show. If you have just tuned in, hit that like button and subscribe. Yes, silver is skyrocketing. Yep, I love silver. Snowball ready for D5 Avalanche Day. I haven't been looking into Avalanche. I do like Avalanche as a token. However, right now in crypto, I'm very much focused on the real quality. XRP is my top holding. Then I might have some Bitcoin, Ethereum, and Solana, and very few altcoins, because if we are heading into that bear market, then you want to be in quality. Anyway, so if you've just tuned in, 0.2% is the figure that's the consensus number month on month PCE. If it's higher, crash. If it's lower, pump. If it's the same, who knows? Bit of volatility. If it is higher, that's the real concern. That means treasury yields will go high. People won't will say, okay, let me just buy really low risk bonds and I'll make more money then, or make very risk-free returns. So investors must validate these signals by observing flows between consumer discretionary and staple stocks to see if capital is shifting defensive. The alignment of these three indicators will effectively confirm if the soft landing thesis remains viable. Remember, we just want inflation to slowly come down. We want the job market to stay fairly strong. Even though it's weakening, that just means we can have some rate cuts and everything. Inflation comes down, economy stays strong, and we've got our soft landing that everyone wants. However, in practice, doesn't work that way. Maybe it will, maybe it won't. Martyn will also be covering PCE. He's just put the link in the chat. He'll be live in about 7 minutes time. As the data comes out, Martyn will be live as well. I'll be live for maybe another 20 minutes, another 17 minutes, and then I'll pass you over to Martyn. So you do have that choice of stream as well as we hit half past. So there is the link in the live chat. Fear and greed. The stock market is actually is come out of extreme fear, so is crypto market, but the stock market is about to approach neutral. The number that matters today, this is all from our newsletter. What are you doing if you don't have the newsletter? The newsletter gets you prepared every single day. The newsletter saves you 7 hours of research every day. You're not going to do 7 hours of research, or most of you won't be doing 7 hours of research. So let me do the research and you read the newsletter for 5-10 minutes. Plus it comes with unlimited perks and benefits. So many things coming to newsletter. If you haven't got the newsletter yet, I'm going to put a special code in the live chat right now. This will give you 1 week free trial for the newsletter. If you go on the annual plan, try it for a week. If you don't like it, go to the free plan or unsubscribe. If you do like it, continue. There's also a free plan, a monthly plan. Go click that link and get this newsletter. The newsletter gives you everything you need to know, all the top news stories, all the deep dives, what I'm holding. You get the chart of the day, you get the money move of the day, you get everything. The winners, the losers, the top movers. The number that matters, and today's number that matters is 2.9%. Why is 2.9% important? Well, that's a year-on-year consensus figure for PCE. Everything today is focused on PCE, which comes out in 6 minutes. So markets are bracing for 2.9%. Let me go back to the screen here. I want to make you familiar with this screen because this is where we're going to get the data as soon as it releases in about 5 minutes' time. These two up here, you see, I'm highlighting it in grey. These two up here. We're going to get core PCE, we're going to get normal PCE, we're going to get personal income and personal spending. What I'm focused on and what the market is focused on is core PCE. Month on month, we're expecting 0.2%. Year on year, we're expecting 2.9%. So that's why that 2.9% figure is very important as well. So 2.9%. Markets are bracing for 2.9% year over year print, representing zero progress into the previous month. So that, again, that is a slight concern, but the market's already priced that in. They don't care. If it's 2.9%, that's what the market priced in. This flatlining near 3% is the bond market's nightmare scenario. If we stay here for months and months, the mod market won't like it. That means inflation is stuck well above the target despite restrictive rates. A surprise uptick to 3%. If we get in 5 minutes time, you see that refresh and we're at 3%, 3.1%, 3.2%, would shatter. A surprise tick up to 3% would shatter the disinflation is working narrative, forcing an immediate hawkish repricing of the 2026 Fed funds curve and a spiking front yield and spiking front end yields. We will have chaos in the markets if it's at 3.1%. If it's at 3%, the market won't like it. Why? Well, because inflation is already pretty sticky, and if it goes any higher, then the Fed won't cut rates. Or the chance of a rate cut, which is currently pricing at 87%, will drop significantly to under 50%. So if we do get a number above consensus of 2.9% in about 4 minutes' time, that's when I'm not going to... If I had all my computers in front of me, I might short the market. In all honesty, I might. If it's at 3.1%, 3.2% for a quick return. I'm not suggesting you do that. I don't give financial advice. I'm telling you what I might have done. But I'm not doing that because I'm presenting the show to you guys. But what I can do after I end the show or while I'm on the show, I can press buy and I'll buy crypto, I'll buy stocks, the ones that I want to buy, because they're probably going to start cascading liquidations if it's at 3.1%, 3.2%, anything crazy like that. If it's at 3% and we get a sustained sell-off, then maybe I'll get another chance to buy as well. So 2.9% and above, well, 2.9% is consensus. Who knows what will happen then? Maybe a sell the news, maybe slight sell-off. But if it's at 3% or 3.1% or 3.2%, that's when we could be heading into quite a steep drawdown very quickly. We've got the winners and losers every day in the stock market. We all saw what happened with Netflix. If you haven't heard the news, it's actually one of the top stories as well. We've got the market snapshot. We've got Ronaldo entering AI. We've got the Asian rally. We've got Bassett may become Trump's sole economic architect. That's a very important story about the inner circle around Trump. We've got Fed's next cut may be a broken switch. So the Federal Reserve is set to cut rates next week, likely bringing the target range down to 3.5 to 3.75 to support the wobbly market. But Bloomberg's data suggests this cut might be a dud. The economy isn't responding to cheaper money like it usually does. Mortgage rates has dipped to 6%, yet buyers remain paralyzed by record high prices and jobs anxiety. Simultaneously, manufacturers aren't borrowing to expand. They're hoarding cash until tariff landscape settles. The Fed is flipping the switch to growth, but the wiring appears to be disconnected. We keep getting cuts, but the economy internally is not actually getting any better. The disconnection signals a major risk to retail portfolios in 2026. I'm making this clear. 2026 could be a horrible year. And it could all start in 2 minutes when we get PCE. If PCE is above what we expect, this turns into a real concern. If it's lower, then brilliant. We can have another short to medium term rally. Very short time will rally as well. And what do I mean if it's better? Well, we've got two numbers in 2 minutes time. And let me bring your attention to the screen here. These two top numbers with the red, core PCE month on month, core PCE year on year. 0.2% is the month on month figure we're expecting. 2.9% is the year on year figure we're expecting. If it's at 0.3, 0.4, if the year on year is at 3%, 3.1, that's bad. The market will probably sell off quite significantly. If we're lower than that, then the market will rally and the rate cut expectations will go up. That's what you've got going on there. If it's lower, rate cuts expectations will go up and we'll get a rate cut next week. If it's higher, then rate cut expectations will drop and we might not get a rate cut depending on how bad that is. We're getting that data in 1 minute. We've got a whole deep dive on this. We got this every single day. Please check out the newsletter. We're 1 minute away now. The newsletter link is in the live chat. Come back and it's in the first link in the description. Check it out. Free trial. For the annual plan, you go on the annual plan, you get 1 week free trial. You can also do a monthly plan. You can do a free plan. It's definitely worth getting. We've got a whole deep dive on the vibes versus the reality audit, why Friday's delayed PCE is the final arbiter for December. We've got a lot of information here. The soft versus hard data divergence. We've got the statistical fog, shutdowns and imputations. We've got the Fed stance, division before decision. Right now, the Fed is a bit divided and that's causing issues as well. We've got the feedback. There's a lot here. So we're looking at the core PCE change, the 10-year treasury yield, because bonds are very important, and sector rotation. So final say. This is refreshing now. We're seconds away. Let's go over to Bloomberg. Let's go over to some breaking news. Bloomberg is about to go live any second now. We're 18 seconds away from this. If it's above 0.2, I will be very worried. If it's above 3, then I'll be very worried. If it's below, then I'll be bullish. Here we go. Breaking news coming to you now.
Good morning, good afternoon, good evening.
Consecutive days of gains, up now, fading a little bit from earlier, down up just about 0.1% on S&P futures. Seeing a little bit of euro strength, a little bit of dollar weakness, 116.49. Really, the question heading into next year is how much does this dollar weakness continue to mount that we have seen?
We're refreshing, we're getting ready.
And watching yields, they've come off some of the earlier highs, 4.11% rounded up. Take a look at these commodities. This, to me, is where the action is this morning. On one hand, you've got natural gas futures up 3.7% as people take a look at A, how cold it is, and B, how much that you need to use energy in the face of all sorts of technological.
We're not getting the data come through.
Prices up 1.6% in pre-market trading. 1 hour away from the cash open. Here is your morning movers with Yahira Anand. Yahira.
Hi, Lisa. It's a blockbuster deal that could reshape Hollywood. Netflix.
I think it's been delayed. This was one of the risks. I think it has been delayed. Stay with me while I get some up-to-date information.
Deal wrapping up a dramatic saga that was months in the making. The deal pushes Netflix deep into traditional Hollywood, managing a 100-year-old studio and getting into the theatrical business, an area that has not fully embraced and what also could be.
I think we might be early. The time has changed. Stay with me. We're staying with.
Is that sweetener, that $5 billion breakup fee, if regulators don't approve the deal? Meanwhile, we are seeing Victoria's Secret shares surging 14% in the pre-market after the retailer raised its full-year outlook in a sign that the turnaround strategy is working at the company. But now that we've nearly wrapped up all the retail earnings, I think
it's coming out in a second. Let me just check this one more time.
We've seen with Ulta, Macy's, American Eagle, Walmart, the list goes on, all posting.
I'll give you updated information in just a second.
HP not seeing the same luck.
Even if it's later, that means I've got more time to give you more information.
A softer than expected sales outlook, a blow to hopes that AI server demand would drive a bigger jump in revenue, and part of that weakness was due to order delays, with the CEO saying that big U.S. government and European deals slipped into 2026. That was due to a data center not being up and running and the U.S. government shutdown, which is getting a lot of blame this morning. Lisa?
Thank you so much, Yahira, and wonderful work all week. And honestly, blame because maybe they deserve it. I mean, come on, some of this data coming out of Southwest, let's be honest.
And it's not Southwest's fault.
Okay.
Some of these airlines
Is because of the shutdown. So the shutdown has caused the PC data to come out a bit later because it's such a big deal today. This is the first PC data. I think there's multiple places reporting different times. One was about 2 minutes ago, and the other time I'm seeing is in about an hour and a half. So stay with me. Let me give you some more information, and I'll see if any more data comes into me. Let me see if Martyn's live and is getting any data through him. Let me have a look.
Okay, that's Central Time. The time we're looking at now, 7:30. So we've got an hour and a half. The markets will be open. They're going to be open.
Interesting. Okay, yep. Okay, I apologize. Let me come over here. I apologize. The data has changed. The data is coming out in an hour and a half. So what we're going to do is go over to Martyn, and then I might be back live for the data release because Martyn is live right now. In an hour and a half, we'll get PCE. Dude, it's what's going on? Yeah, the market is coming. Look, I bet you the market right now is reacting to this. Why would I say the market is reacting to this? And it is. Look at this. I'll explain something to you in a second. Here we go. If we go over to the chart over here, this is the S&P 500, and the S&P 500 has just sold off to the minute. We go back 5 minutes, this was about 4 minutes ago. Why did the S&P 500 drop here? Well, because there's a lot of bots trading this, and everyone thought that the data would be released at the half past, and you initially get that sell-off. So we've just got evidence here that the market thought the data was coming out 4 minutes ago, and the bots thought it was coming out, and we actually got a reaction to the downside. That's probably going to be the initial reaction in an hour and a half. The market makers are wanting to bring this down. So in about an hour and a half, the first candle will probably be a red candle, depending on what the data is. But everyone expected the data to come out now, but we are now expecting this to come out in about an hour and a half from now. Let me just check Bloomberg one
market and of the economy. Right now, we're kind of flying in the dark because we aren't getting a lot of real.
Yeah, okay, yeah, it's confirmed. An hour and a half. I apologize. And an hour and a half is when the data gets released. That gives you more time to go and read that newsletter. There's a whole deep dive we didn't manage to cover, but that's important for this data release. Who cares whether it's now or in an hour and a half? But what's important is you're prepared for the data release. PCE is super important, and the reason it's been delayed. Every single month we cover this. And it's always 1:30 UK time. The reason it's changed this time is because of the US shutdown last month, which has caused the delay. Are we back? I apologize about that. Yeah. So the reason, let me just check we're back. The reason we are, well, I just want to see if we're live. Yeah, we are back. So the reason it's been pushed back is because it's so important. First of all, it's PCE. It's the one figure that the Fed, or the main figure the Fed look at next week before we get the FOMC. Also, because it's so important, they need market liquidity. They don't want to do it pre-market. So they're actually going to be releasing this data during trading hours in the US. So it does make sense, but it is very abnormal. And that really does suggest this is going to have a massive impact on the market. So we're 1 hour and a half away. Thank you for tuning into the morning show. Go check out the newsletter. I'm actually going to send you over to Martyn now, who's live. So here is... yeah, it's 3 p.m. UK time. That will be 6 hours before... 3 I think that's 9 a.m. Eastern time. 10 a.m. Eastern time. 10 a.m. Eastern time it is. If you're in the US, it's 10 a.m. Eastern time. Anyway, go and check out the newsletter. Lots there to get you prepared. I might be back in an hour and a half, depending if Martyn's live or not. But here is the newsletter. Thank you for staying with me. Thank you for tuning in. We're live with every single data release, and there is some very important information for you there. Next year is going to be very choppy. In the short term, if you go read the newsletter, you'll be completely up and ready for the PCE. Even if you sign up now, you can just go to the archive and then read newsletters that haven't come out yet. Until next time, take care of yourself. Wow, that was crazy. We expected the data. I was ready, and then it didn't come out. But who cares? It's in an hour and a half, and we've got all the information, and it makes sense. They need the liquidity. That just shows you how important this data release is. Until next time, go over to Martyn now. He's live. He'll be live with PC. He's live right now. The link is pinned above. This show will automatically take you there if you stay where you are. Martyn is live with PCE right now. Until next time, take care of yourselves